First, I wanted to introduce myself. My name is Brad Fox from with HomeSmart Connect. I know some of you I'm just meeting for the first time, but just wanted to welcome everybody. Yeah. So, the goal of this whole homebuyer seminar isn't, hey, do you want to buy a house? It is, hey guys, I want to give you guys a step-by-step, give you as many resources as possible, so when you are ready to buy, I can get you pre-approved. I can get you, talking about what a home inspection is, what a home warranty is, what homeowner's insurance is. Really a general overview of the whole process. So my goal by putting this on is just to make sure you guys leave with more knowledge than you came in. Okay? A couple people I wanted to say thank you to. Lexi here. Lexi, she's been helping me set this thing up. She helps me with a lot of my marketing, social media, all that good stuff. And my beautiful wife, and then the girl that's been wanting to be introduced for a long time, my daughter, Stella, the little Miss Helper over here. So just wanted to say thank you to those people as well as our sponsors, okay? So I couldn't put this on. It takes a lot of people, not just me, to put this event on, okay? We have Logan Breen from Cross Country Mortgage. Logan is my preferred lender. I actually am a licensed loan officer as well, but he does such a good job, I refer my business to him. Okay? So, I mean, he's going to be talking about, all kinds of loans, first-time home buyer programs, just a general overview, and we'll go from there. Next, we have Goosehead Insurance, James Underwood. So James is going to give you some knowledge about what, about policies, everything else. We have Mario Cacharo here, who is my preferred lender, my preferred attorney. I'm sorry. I got Eric from Human Water to talk about water quality. Anything from reverse osmosis systems to water softeners, all that good stuff. And then we have Danny Jenkins from Smart Title. Danny, she brought some awesome cookies, and she is also going to be just kind of talk about what a title is of a house, just general overview knowledge. And then Lori Amato from Choice Home Warranty. She cannot make it due to be testing positive for COVID, but I personally have a home warranty with her, and I sell a lot of them for her. My clients love working with her, so I'm going to give you an overview on that as well. So, tell you what a home warranty is, what it covers, what it doesn't cover, and then I decided I'm going to give away not one but two home warranties. We're going to raffle it off while people are still here. It's a $660 value. So what that is when you purchase your first house, if you win the Choice Home Warranty, you're going to get a whole 1 year. It'll give you guys peace of mind of if your refrigerator breaks, your washer, your dryer breaks, your furnace, your AC, all of that stuff, it will be covered. It'll give you guys, the buyers, peace of mind that, hey, I just put a bunch of money down on this house. I want to make sure that it's protected, and I don't have to come in and spend another $5,000 or $10,000 on a furnace in the middle of winter. So again, for peace of mind, it's not an insurance policy. It's just like a homeowner's insurance policy. It's just a separate policy to protect you guys. So I'm excited to give you guys two people home warranties. So then I do have a few raffles we are going to give away. And then the last person is Eric Gillis with My Guy Home Inspections. Eric will tell you more about the home inspection process. He's also owns a radon company, so he's going to tell you what radon is and all that fun stuff. So I kind of want to keep it loose, interactive. If you guys have any questions while the presenter is going, just go ahead and raise your hand. Let's talk about it. So, or if you don't feel comfortable with that, I'm going to be here. These guys are going to be here. Really, if you have a specific question for a home inspector, to get an insurance quote, stuff like that, we're going to be able to help you guys. So, again, I appreciate you guys coming. I just want to start by just a little background on me, myself. I have a beautiful wife, 2 children, Stella and Brecken. I've been doing real estate since 2018. I've been in the mortgage business since 2003 as well. So, I've closed 250 deals since 2018. I specialize in McHenry, Lake, Cook, DuPage County, okay? So if you're looking for a house, not in McHenry or surrounding, I mean, I put miles on the car. I enjoy showing people houses, and I really love getting people into houses, and not just getting them into a house just to make a sale. It's about building that relationship with you guys to really, so when you go to sell, if you're not buying investment property down the road, you guys don't think, hey, who should I call? You're gonna think of me and my team that I work with to really get you guys to the finish line. So nobody benefits from buying a house or selling a house unless we get to that finish line. That's our goal, is my preferred partners and I to really get it. So, with that being said, I did give you guys each a folder, okay? It's in chronological order, I think. I know so. So this first page here is just the whole timeline, okay? This is just a general timeline. So when you're looking to buy your first house or another house, or if you bought 10 houses, it doesn't matter. You just really want to assess your situation. You want to assess, what are your goals? What's your timeline? All that good stuff. And then, we can set up a time. We can set up a time to go over coffee and just kind of go over it. And I can say, hey, you know what, this does sound like the right time for you guys. Let's take that next step, okay? And then right after that, it's about finding the right agent. Good thing is, I made that easy for you guys. I would love to be your agent. So, and then really the next step is getting that golden ticket. It's really getting that pre-approval letter. Logan's gonna come up and we're gonna talk, because I work for Cross Country Mortgage as well. We're gonna kind of go back and forth and really just go over what a pre-qualification is compared to a pre-approval. There is a big difference. And what Cross Country Mortgage and Logan does to really do a quality job, quality underwrite, and get you guys into that house sooner than later. Okay? So with that being said, what I'd like to do is just, we'll start with Logan. We got a PowerPoint presentation here. We're gonna go through that. Then after that, we're gonna just go down the process. I'm gonna jump on. I'm gonna talk with you guys about some successes that I have had selling houses with the competitive market that we're in. I mean, there's different tools that I use that other agents might not use, and so we'll go over all that good stuff. And then what I did is in the folder I put together the first 2 pages of a real estate contract. We'll just do a quick overview of that so you guys kind of know the meat and potatoes of that. And then we'll just go down the line. Once we get your house under contract, we'll talk with the attorneys, with the insurance companies, and all that good stuff. Yes, Stella? We will go over what a home mortgage means. So, let's start with Logan, guys. Again, thank you so much for coming. It's a good turnout, and let's go.
Thank you. Is anyone here actually a first-time home buyer? Is anybody? 1, 2, okay, 3, 4. So one. Okay. Yep. Well, I talk a lot. I tend to over-explain, which is good for first-time home buyers. But I just want to make sure.
Can everybody hear?
Yeah. Can you guys all hear me? That's it.
If anybody has any questions, please, I will not be offended if you cut me off, because there is a lot to this, and again, sometimes I will forget to mention something, so please just cut me off. And I'm not gonna go too much on the unimportant stuff, like what is a mortgage. We know what a mortgage is. It's a legal agreement between you and an agent. You obviously have to pay every month. So I'm just gonna talk about kind of what I think is important. Starting off, there's different loan programs. VA, we have any veterans or active duty? No? Okay. So that's what that is for. It's a great program, but again, no one here is active duty or a veteran. I won't go too far into it. I would say the 2 most common mortgage types are FHA and conventional. And a lot of first-time home buyers, they think that an FHA loan is a first-time home buyer loan. And it even kind of, FHA, first-time home buyer, but it's not. FHA is a government-backed loan, and it's a little bit more lenient on approvals, meaning you can have a little bit lower credit score. Your debt-to-income ratio might be a little bit higher. So a lot of first-time home buyers that might not have perfect credit or putting down a large down payment, that's the one that they qualify for. So it is a little easier to qualify for, and then you have your conventional loan that, you know, is what most people might think, oh, my parents put 20% down, they probably got a conventional loan. It's, you know, it requires a little bit higher credit scores. Some might say it's a little bit better of a loan, but there's no, you know, it's just whatever program out of those two fits the buyer the best. That's my job to say, hey, here's what this one looks like, here's what this one looks like. And then within those programs, we have first-time home buyer, you know, incentives that might give them money, stuff like that. And then you have, you know, your new construction loans, which kind of falls in into those loans. So when you're going to get, you're coming to me saying, I want to buy a house, I want to get pre-approved. Basically, I'm going to ask you, you know, are you working? If you tell me no, you're not working, I'm going to tell you, well, you have to get a job. But if you're a W-2 employee, we basically ask for pay stubs, W-2s, bank statements to make sure, you know, that you might have enough money. And then if you're self-employed, we go based off of your past year's tax returns. And so, pretty simple. So this is important. This is, Brad kind of, you know, touched on this for a second. So there is a difference between a pre-qualification and a pre-approval. And to me, a pre-qualification is, it shouldn't even be a thing. Basically what that is if, let's say you went on a loan website and it was asking you questions, how much money do you make a year? And you could put in, you could type in what you make, or you could type in 500,000, and it will spit you out an approval based off of what you're putting in there, right? So you could just make it up. Again, no paperwork, ballpark figure. Why would you want a ballpark figure of what you're qualifying for? You want to know what you're qualifying to. So a pre-approval is where I'm gonna, you know, run your credit, ask you all these questions, but also ask you for the documentation to essentially verify what you're telling us. So that we know that, you know, hey, if you say you make 100 grand, we want to make sure that you make 100 grand. And if we're telling you you can buy a house based off of what, you know, this amount that you make, we want it to be accurate.
The one other point I did want to touch on in regards to that pre-approval. A lot of people say, well, I don't know if I'm ready just yet. I don't want to get my credit pulled out, right? Because I don't want my credit pulled multiple times. So your credit is good for, when you get your initial credit pulled, you know, it's good for 90 days. That's not saying you can go out and buy stuff. I mean, I've had instances where people get the weeks before closing and then they go finance 30 grand in furniture and stuff like that. Then they don't, because there is a soft pull right the week of closing. So I'm not saying, hey, here's your golden ticket, you're good for 3 months, do whatever you want. It's just keep that in mind. Your credit's going to get pulled once. If there is a couple things on the credit that we need to kind of fix and tweak just to get your score up to that next threshold to really get that best rate, that best program, then we do have the tools and the resources to be able to do what's called a rapid rescore. We can do, and you can maybe touch on that a little bit about the credit simulator and all that good stuff.
I just always tell people it's never too early to have your credit ramped, because what you don't want to do is, you know, wait until closer to when you're really going to start looking, and then it's like, well, you know, if we have some time, right? Maybe you need a little bit of time to improve scores. Well, then we have that time. If you're waiting until you're ready to go look and there is something that needs to be fixed, now you're gonna have to kind of put that on hold. But yeah, just like Brian said, you know, even if there is something on your credit, I can see it'll tell me, you know, if Susan pays this card down by, you know, $500, her scores are likely to go up by, you know, 20 points, stuff like that. So that's why I say I don't think it's never too early, because we can always walk you through how to improve scores if we need to. I'm not going to talk too much on this, but you know, it's kind of what we were just talking about. Your scores can range from 300, which
You're not buying a house at 300.
I hope I never see a score. I think the lowest score I've ever seen was like 490. So I didn't even know they could go down to 300. I hope I never see that. But yeah, typically to get a mortgage, you want to be in, we can do all the way down to 600. It's harder to do 600. But if you're, mid 600s, that's where it starts to get a little bit easier to get in. And then if you're closer to 800, then you're going to start opening up more doors for benefits as far as, maybe certain programs that you could qualify for, stuff like that.
And also, if you did have any kind of challenges in the past, or if that score is in the low sixes or not, even in the high fives, FHA, and we'll talk about down payments in a little bit, but FHA might be the way to go because you could still put that 3.5% down that FHA requires and still get a decent rate. So we'll talk about the loan coverage and stuff like that too. But I'm just saying, don't shy away from wanting to maybe see what you qualify for. If you're like, oh, my score's only 620,
Right.
there is hope out there. There are options. So.
Yep. And then, so locking in a rate is exactly what it sounds like, is when we lock in an interest rate for you. And we typically, we don't lock a rate until you have an accepted offer on a house. So it's not, I get first-time home buyers asking me, well, what's my rate? And they haven't even, made an offer on a house yet. And I said, well, I can tell you what the rate is today, but that might not matter if you find a house in a month. It might be completely different. It could be lower, it could be higher. So what it says, they fluctuate every day, they do. And so when you have that accepted offer, that's when I reach out and say, hey, okay, now it's time to lock a rate, and just kind of go through those options. Should I wait to lock? I'm not even gonna really touch on that. I leave that. I give my advice, but I don't have a crystal ball. None of us do. And for me to say, hey, I think you should wait. Unless there's something very blatant out there in the economy right now, it's hard to say, at any given time, should you lock or should you wait until closer to closing. Discount points that is tied directly to your interest rate. So the way I always explain this to people is, if you're driving down the street and you're driving past the bank and there's a sign outside in front of the bank that says, 30-year mortgage rate, and they show you a rate, it's gonna show obviously the best rate possible, because not everybody's gonna get the same rate. Somebody who has 600 credit is gonna have a different rate than somebody who has 800. So most of the time when these banks or even lenders are advertising a rate, there's a little star next to the rate, and what that star, the fine print, is saying that there may be discount points to get that rate. What discount points are is you're basically prepaying interest up front to get a lower rate. So if you qualify for a 7% rate, you have the option to pay more to get a slightly lower rate. And so that's what that is. So a lot of the advertised rates might already have that built into it, but it's something that you want to talk about with your lender that you work with, hopefully me, to figure out, is it worth it? Is it worth it for me to pay extra to get a little bit of where it is? It's all math, and when to break even on it, that's how we figure that out.
Right, and then you also want to, so you're gonna have to really see what that payment difference is, guys, okay? So if it's gonna cost you, hypothetically, I'm just using raw numbers here, 2% on a $300,000 loan to go from 7% to 6.5%. Right, I'm just using round numbers here. You gotta see what that payment difference is and how many months it's gonna take you to recoup that $6,000, that $6,000. Because where we're at with rates still being, up there, and all indications are that hopefully what goes up must come down, it might not be worth paying the discount points, because you're going to refinance into a new loan when rates come down, and that would be essentially throwing the money out the window. So right now, in today's market that we're in, I personally wouldn't say, hey, it's worth buying down your rate, because they're going to come down anyways. So, but again, this is the whole overview. We really want to
Pretty much in every instance that I've had lately, it doesn't make sense to do, especially with everything pointing that the rates are gonna be coming down, you know, whether it's later this year or next year. It doesn't make sense to spend thousands of dollars extra to possibly get something even lower when you can refinance, you know, when the rates come down. So,
What do you consider the break-even point? What do you tell your clients if you can recoup the money in 32 months, 36
Yeah.
months? What's the
so what I say usually is I point out the scenario to them and say, hey, you know, your payment's gonna be this much lower. It would take you, for instance, 36 months to break even. I say, so you have to ask yourself, do you think that within 36 months that there is not gonna be a chance to refinance into a lower rate? Most people are like, well, yeah, you know, I from what I hear and see, I don't want to take that chance. Now, if you break even in a year, then it might make more sense. So I kind of just leave it up to the client, but most of the time it just doesn't make sense, especially right now with the rates, you know, being a little higher and expected to come down.
Yeah, and
follow up about this? How about do you have any type of discounts for somebody that potentially might refinance with you in 2 years? So if
Yeah.
you finance them initially,
Yep,
and then
good
say
question.
2 years later the interest rate drops 1%.
Yep.
1%'s $400 or $500 a month. So can you?
Yeah, so anybody that I help to get a loan to buy a home, if you come back, let's say you buy a home and even 6 months later the rates come down and you want to refinance, then we don't have to charge you the loan fees associated with the refinance. So you still pay, you know, title fees, which are,
Minimal
you know, minimal for a refinance, but we can waive the
loan origination fee.
Yep.
That's great.
Yep.
And then one more topic in regards to the discount points I really wanted to touch on is, and this is an example of a deal, one of my listings I currently have now. The buyer of who's buying my listing, his debt ratio was a little bit tight, so they requested a closing cost credit. I'll get to that part when I talk more about it. They had to buy down the interest rate to qualify. Okay, so hopefully we're not going to be that tight in that situation, but everybody's financial situation is different. So again, that's an option too. If you really want to get this house and your debt ratio is
That may be the
close.
only way.
Yeah, yeah, because there's three main components of getting a mortgage. It's your credit score, it's your debt to income ratio, and it's your loan to value. Okay, loan to value is how much you're putting down to how much the house is worth. So those are the three main components of getting a mortgage.
And the debt to income ratio, just to kind of touch on that, is basically a calculation of a ratio of the income you have coming in monthly versus the obligated debt that you have going out. And so when we run a credit report, what we as a mortgage lender care about is what your minimum monthly payments are for each one of those debts that you may have. So I always give this example, you could have a car loan and the balance is 50 grand. We don't care about the balance. We care about what the payment is. So if the payment's $250 for some reason, that's all we are looking at within that debt to income ratio. It's not the balance. Monthly payment, pretty self-explanatory. So your principal and interest is your actual loan that you are borrowing. And that's just set at whatever loan amount for how many years at what interest rate. And then the other three components are your property taxes, which is going to be different on any home that you buy, whatever area it's in, it's going to be different. Your homeowner's insurance, which is something that
James will talk about.
and then mortgage insurance. So, sometimes I think people get the two confused when I'm talking to them. So homeowner's insurance, I always, again, you can tell me I'm like telling this the wrong way, but I always say it like this. I say, when you buy a car, you have to have car insurance. When you buy a home, you have to have homeowner's insurance. So it's that kind of thing. And when you buy a car, they're not providing that insurance for you. You get it. Same thing on this end. We don't provide you with the homeowner's insurance. You get that on your own and then we incorporate that into your payment. Mortgage insurance is what some people might refer to as PMI, and that is something that you will pay monthly with your payment for if you put anything less than 20% down on a home. Once you get to 20% equity, you can have that removed if you are on a conventional loan. If you're on an FHA loan, you'll have it for the whole duration that you have it. But if you are in an FHA loan, you can always refinance into a conventional loan as well, which is what I did myself at my first house.
Another thing I want to also touch on in regards to the PMI, and I actually just I love getting these calls. I got a call from an old client that that bought a house in Johnsburg 2 years ago. And she paid, I don't know, I think 190 or 180 for the house. And she's like, hey, Brad, what's my house worth? And I did a market analysis for her. I said, hey, I'm not the appraiser from the lender, but if you know that your house has gone up in value, or if you paid your house down, depending on who the lender is, you can try to get that private mortgage insurance dropped without having to refinance. So you're going to pay $500 or $400, whatever it is, for the appraisal, but you're not going to have to spend all the time of getting the documents for underwriting and this and that. So that's just another resource that not a lot of lenders and not a lot of agents had the knowledge of that. So that's something that just to keep in the back of your mind, and you better believe I stay on top of them too. If I know values are up and you want a house from me, I'm going to be calling you and say, hey, you should maybe do this. It's just that extra layer of value there that really helps benefit the home buyer.
This comes up a lot. So when you're buying a house, obviously you're going to need some kind of money, down payment, closing costs, and I often get asked, well, can I get money from my parents or whoever it may be? And yes, you can. It's not as easy as just my dad's going to give me $5,000 in cash. It doesn't work that way. We have to document any money that you're going to get to use towards this house. We have to document it as a gift. And I want to say, it has to be verified funds. That's what it has to be. So what doesn't work is when someone literally, gets cash from one of their friends or family members and puts it in their bank account. We can't verify cash. So there are ways sometimes to, be creative and get around that, but ultimately they have to be verified funds. So the gift donor, we have to know who it is. We send them a gift letter to sign, and then we just have to see the paper trail of where that money came from. So if your dad gives you a check for 10 grand, we might want the, something from the bank showing that, there was a transfer from this account to this account, and then the dad to fill out a gift letter and sign it and all that stuff. So it just has to be documented.
And one thing now as well, I want to just point out too, if you're 60 days out or 90 days out or whenever your timeline is to purchase, if you have, some people keep cash, some people, just for safekeeping, in case of an emergency. Get it in your bank account. It's got to be sourced and seasoned for 60 days, okay? So fannies. If you're like, hey, I'm going to buy in May, let's get, and your down payment could be cash or from family orders if you just save cash. Yeah, get it in the bank, get it sourced and seasoned. That way, when we come to this step of the process, we don't have to go through the extra paperwork, getting a gift letter and stuff like that. It's all about being proactive, and that's what us explaining this really hopefully I'll help you guys.
That's a good point. Yeah, because we only have to get the last 2 months of bank statements from you. So anything before that, whatever happened, we don't know.
The lender doesn't care.
We don't know, and we don't care. Every lender is going to have closing costs. One might be a little bit different from another. Most of the stuff is, and I sometimes try to explain this to clients, like, no matter where you go, you're going to have third-party closing costs. So you're going to have title charges. You're going to have an appraisal charge. You're going to have what else?
Underwriting process.
Well, so the loan fees are what's going to differ from lender to lender. And that's what the lender is charging you, whatever, to do the loan. But there's also those third-party charges that really essentially aren't going to be any different no matter where you go. It could be a little bit different depending on what title company is used. But every loan is going to have closing costs. Some, like for us, for example, we have a bunch of different first-time homebuyer programs that will give you money to pay for some or most of your closing costs. So it does differ what programs are available to help with closing costs. And every lender is going to have different costs to do the loan, but all those third-party charges, you're pretty much going to have anywhere, and they're kind of going to be similar.
They're all within like a 10% tolerance. Honestly, guys, it's.
So, is it common for it to change like 900 times when you're closing? Because in our case, it kept changing, and it was this
No.
amount, and it was this, is that?
Yeah, so when I do the loan in the beginning, my job is to be as accurate as possible, because there are some of those third-party charges that, at the time of starting your loan, I don't know what title company is being used maybe. But what I always do is I always do worst case scenario, and I relay that to you. I say, hey, these title charges, I have them a little high, but I'd rather do that when we get the actual invoice from title. I'd rather them come in a little bit low and me come back to you and say, hey, actually your closing costs are a little bit lower than what I showed you. But all it is communication.
Yeah.
And if the lender doesn't communicate that and explain those different parts, then yeah, it will change and you're not going to understand why.
Right.
So my guess is probably, forgot to put something in there or had something on the lower end and then it got higher, this, that, and the other. But I can explain those things in the beginning so that I can tell you, hey, this might change a little bit. But again, I always like to do worst case
Or
scenario.
the opposite, it was not that much, and all of a
Yeah.
sudden,
Yeah.
how about with 10 grand?
I mean, unfortunately, I've heard that happening a lot, but that's also, just the lender and their communication.
And then also when you first get, you get the contract, submit it to the lender. We provide what's called a loan estimate, an LE. Okay, that LE, there's certain charges on there that there is only a 10% variance that you can have. So again, rather under promise and over deliver and say, hey, look, your title charges are X, or on the loan estimate, but at closing, they're not going to be like this. And again, good lenders, good agents.
Yep. And I
If you
learned
have a
that-
good team, you're not gonna. I can promise you will not run it.
I learned that the hard way when I first started, but I soon realized that, well, you know what? Somebody would much rather me tell them it's much, higher, but hey, the chances are it's going to be a little bit lower, than just assume it's going to be lower. And then in the end, it's like, well, it's higher and you don't have any choice, So I totally get where you're coming from with that. And it can be avoided.
Definitely can be avoided. And again, it's I would say I don't like calling out places, but like the Quickens of the world and stuff like that. You got to just if you're seeing the advertisements for Quicken and stuff, other certain companies, it's like you got to just take it. If they say we can do this, you got to look at that loan estimate, because that loan estimate, I've seen it be 5 figures. It can be in settlement charge, or just loan origination charges. And so again, gotta really be careful of that. And if you want to shop it, the interest rate or whatever, you don't just say what's my rate. You say provide me a loan estimate.
Yeah.
That way we look at apples to apples, guys. It's like, okay, here's option A, here's option B, and then you make the best decision that's for you guys.
Yeah, just like you want to, it's like you're buying the most expensive thing you're ever going to buy in your life. So, yes, you could go online, fill something out, and talk to a guy that is sitting behind a desk in California, but you really want to do that when you could work with someone locally that's going to, walk you through everything. That's kind of the idea behind it. But, you know, everyone has their own, you know, I'm not saying one person is wrong.
Just be conscious of it.
Yeah.
When you're shopping, and that's why bringing all the different people together, it's really sweet. You know, this is my team that my preferred, you know, partners that I work with that I know are going to do a good job and get us to that finish line.
Yep. Escrow account, the way to look at, so this is where you have your loan, you know, you have your mortgage payment, which consists of your loan payment, your taxes, and your insurance. That's where that's the escrow account. That's where your property tax payments go, and your insurance payments, because you know you're not paying that bill outright for taxes. If your taxes are, you know, let's say $10,000 a year, you're not paying that property tax. You're paying it monthly to go into this escrow account, which is, you know, look at it like a savings account that we then, once the bill is due, we take it out of that escrow account and we pay the bill for it. So that's what that is. That's where your taxes and your insurance payments will go every month when you're making your payment. And when you're making your payment every month, you could log on and it'll tell you what your escrow balance is. And then when the bills get paid by us, you'll obviously see that balance decrease.
But you're not going to be on the hook if you have an escrow account. You're not going to be on the hook every June and September or whatever account you fall in when taxes are due. You're not going to be like, oh man, I only have half a tax bill right now. So I would highly recommend having an escrow account. If you don't have 20% down, you have to have an escrow account. You have to roll in it. But if you were to put 20% down payment down,
You have the choice.
then you have the choice. But just be prepared. Then you're
You gotta pay that
going to
bill.
get a big bill come whenever a month before the tax bill.
Some
just
people
be conscious of
prefer
that.
to pay it. They put down 20%. They prefer to pay the bill outright. But most people are like, I'd rather just.
I'd rather have them do it.
Yeah.
And make the payment.
Just for first-time home buyers and that, is there a fee for the escrow to hold it?
There is a fee, a small fee to not
To not have it.
Right.
Lenders-
So it's a free
lenders-
service.
Yeah.
Yes,
Very
yes.
important.
And the reason behind that is because the lender then feels that there's less,
Risk.
security. If we're relying on you to pay your own tax bill, then it kind of gives us, that like, okay, that's why that there's a fee to do that, because they look at it as a little bit more risk involved.
Yep.
Good question.
That's a great question.
I pretty much already talked about this. This is just kind of what happens when you apply for a loan, which I kind of already touched on. This is important. Like basically the do nots. In a nutshell, I think there's there's maybe a little misconception of this, because I'll have people say like, oh, I got an offer for a new job, but I didn't take it because, buying a house. I'm like, no, you can take a new job. As long as if you're an hourly or a W-2 employee making a salary and you're going to another salary position, if it's more, sure, why not? It doesn't even have to be in the same exact industry. When you would have a problem is if you went from a W-2 salary employee to being either self-employed, or maybe a job that pays commission only, or heavily relies on commission. That's bad. Now, if you go the other way around, if you're self-employed, you've been self-employed, and all of a sudden you get, offered a position at some company, straight salary, you could get a loan right away. There's no problem at all. So, in other words, you don't want to just. I always tell people, if you're going to change jobs or do any of that, and you've already talked to me, run it by me first, just so we make sure. But you can essentially change jobs. I just like to be to look at it to make sure it's not going to cause an issue.
And then if you are a commission-based employee or bonus, us as a lender, we're going to want to see a history of that. It's not, if let's just hypothetically say car sales. Okay, we need to see a 2-year history of you making commission in that line of work. Just because, as we know, it's an up and down.
Yeah.
Or or a real estate agent.
Right.
You know, so
Any fluctuating income, basically, is something that we have to see 2 years up to average it, because
we average it out.
if it's fluctuating, we can't just say, all right, well, you got 5,000 in commission this month, we'll just use 5,000. No, we have to see the history, so that we can have it to average, and that's, it's just, you know, simple as that. But yeah, real estate agent. The other things you don't want to do, just Brad said it earlier, you don't want to go, you know, if you find a house, you got an accepted offer, you definitely don't want to open up any lines of credit. You don't want to, you can use your credit card still, you know, like you normally would, but you don't want to open any new lines of credit. You don't even really want to inquire about any, because we're going to see that. We're going to get notified, and we have to ask you, can we provide you with this? And if you did open a new loan, we have to add that in to your debt to income ratio, and it could cause problems.
it bounce you guys out of what you're pre-approved for.
Yeah.
Example, Logan and I had a deal last year. Say, don't think I had credit. They went to a new town. They had $1,100 payment, and that bumped them out. And we had to creatively put the pieces of the puzzle back together to get them pre-approved. So
It causes issues, yeah. Not that we can't solve them, but
Right.
I mean, sometimes you can't. But you know, we were able to. You know, yeah, keep your credit history steady. Don't miss any payments. Be responsible with that. Don't change bank accounts. That's probably a good one. You don't want to open a new bank account all of a sudden. And then, yeah, one that it does come up quite a bit is if you co-sign for, let's say your son wants to buy a vehicle, you're going to co-sign for him on this vehicle. Well, if you're coming to me to buy a house and I run your credit, you could tell me that it's not your car, which I'm sure it's not your car, but you're co-signed on it, so you're essentially on the hook for that payment too. So, you know, I wouldn't do that unless you absolutely have to, or you're not buying a house.
another one that we see with that whole co-signing is student loans. So if you're co-signing for a student loan for somebody, for your child or something like that, just if you're going to be looking to buy, you got to make sure you got to get that payment. And again, just be cautious of that if you are in the home buy. I'm not saying don't co-sign for somebody if somebody needs help, but if you want to buy a house, it's just keep it till after that.
Yep. I probably will let you talk more about final law.
Yep, we'll talk about final law.
And even probably closing day.
Yep.
Just so yeah, that's pretty much it on my end. I'm sure something else has come up, but I'll let.
So that's kind of an overview of everything with the mortgage. I know it's a lot to take in, but there's a lot of knowledge. Logan, I can tell you, still thousands of loans. You're in great hands if you're lucky enough to work with him, or if he's lucky enough to work with you guys. Okay. So couple of things I wanted to touch on is just once you get that golden ticket, guys. Once you get that pre-approval, you're ready to go. Then the fun begins. I'll be honest, I love showing houses. I like walking through the good, the bad, the ugly. So I just, it's something I'm passionate about and I really love doing. So, you know, when we're looking at properties, well, before we even go look at a property, I wanted to kind of touch on a couple tools that I've used to really help, you know, with how competitive the market is. It's good to be one step above or have that extra, you know, search, not just going on Zillow or going on Redfin or Homes. I specifically had I've had so much success in using, it's an agent exclusive app that you and I can work directly with. It's called Zenlist, okay? I pay for it, you don't have to do anything. What I'm gonna actually do is send you, each person that signed up today, just an invite today, this afternoon. Again, you don't have to give me all your info, it just says boom. And what I say is it's like Zillow plus one. It's like a Zillow and then some. And the biggest and then some is if a house is on what's called the private listing network. The private listing network, with how competitive the market is today, especially in Illinois here, that some agents, and I'm one of them, we'll go ahead and put a house, even if it's not gonna hit the market for, let's say, a month, okay? We'll put it in a private listing network to gauge excitement, to gauge how much activity I get on the property. And that really helps the seller decide when he wants to go live with the house. Well, you can see that through my Zenlist app. And what that does is, if you're like, Brad, this house is on the private network, I need to get in there. This is our house. Then that's why you have me to advocate for you. And I'm gonna go and I'm gonna be a bulldog and contact that agent and say, listen, I need to get in this house. What do we have to do to get in there? Because I've had success with it. People fall in love with the house that's on the private network, and we sell it before it even hits the market. So that's the biggest tool with Zenlist. Also, it's a great way for us to communicate. I'm on my phone constantly. My wife will contest to that. But it's a great way for us to be able to communicate via text through the Zenlist Direct. And I've communicated with a few people in this room that way. Question?
So with the Zenlist, and it's on the private market, are there then less offers going in those homes?
Yes, because you, the consumer can't go on Zillow and see it on the private listing network. So only agents that have access to the MLS can see it in what's called the PLN. So again, it's with houses selling for over list price or how competitive it is, depending on what. If you're looking for a $200,000 to $400,000 house, which a lot of people do, it's competitive. There's going to be multiple offers. So my goal is to give you that extra resource, that extra tool, that extra step to really be able to secure that property before it even goes on the market. And I can tell you, out of 40 deals I've closed in the last 12 to 18 months, I would say a half a dozen of those I was able to secure off of the private listing network. So it is a tool, it's free to you guys, and it's like, why not use it? It's like Zillow on steroids. It's just because it's literally, it's awesome. So once you guys start, it gets addicting too, guys, when you're looking at houses. I'm sure you all do already. And you wake up in the morning, hey, what's hit the market? Oh, I just got a notification from Zillow. Or, oh, Redfin just said this. If it fits your search criteria. So, once we find the right house that you want to see, then we'll go out and we'll take a look. Okay, we're going to evaluate it. We're going to look at the condition. We're going to look at the price. We're going to look at the condition. We're going to look at the location. Okay, and then what I'm going to do is I can even do a full-fledged market analysis for you guys. If you guys are saying, hey, is this house worth it? And is this house worth $300,000? I can then go and pull comparable sales for you. It'll take me 10 minutes to do it. And I can give you guys my honest opinion, my honest feedback. Like, hey, listen guys, here's comparable 1, 2, 3, and 4, all within a mile or 2 miles. And yes, this house will appraise. Now, having me as a licensed mortgage broker as well, not doing your loan, I have that extra layer of the resources and saying, hey, look, this is a good house for you, or this house is overpriced, or I can give you my honest feedback in regards to that. Next step is writing an offer. Once we find that right house for you guys, let's write it up. So in the folder that I provide you guys, I didn't want to give you a 13-page real estate contract, but I did include the first 2 pages. Okay, just kind of like the meat and potatoes of it. So if you guys want to look, you can. If not, we're just this is a standard real estate contract, and I just got notified they're changing it again in the next couple of weeks to that. This is the 7.0, it's going to be the 8.0. So, but I can only speak for what's today, so there's not going to be many changes, but, just the first 2 pages just has the name, your buyer's name, you guys, the seller, property address, and then section 3, line 15, it just talks about what stays with the house. Okay, what's a fixture that stays with the house? Anything screwed into the wall, like a light bar or something like that would stay with the house. That's a fixture, okay? And then if you scroll down a little bit farther, other items included at no added value. That's if there's a playground set, if you want to include that. Or if there's, we don't like to add too much stuff from the lending side because underwriter's going to say, oh, why do you have these 15 things on here? But again, we'll work on that together, make it as clean as possible for us to be able to get the loan approved and get the offer accepted before loan can easy. And then any items not included. Some people say, hey, I have these drapes, they were my great grandma's. I want to take them with, they would, the seller would put that on there, that they don't want those included in the sale. But then the purchase price, section 4, I mean, that's the big thing. What are you buying the house for? And then right underneath that is seller credit. I kind of touched on that a little bit ago. Again, you can get a seller credit to help offset some of those third-party costs. And again, once we really dig deep into your specific situation, we'll know, hey, do you have a lot of down payment money? Do you not? Are you spending your life savings on your down payment? And then we can kind of plug in, hey, maybe we can ask for a closing cost credit to help offset some of that stuff. So again, these are all scenarios that we will work through. I just wanted to point them out to you guys on the contract. Then earnest money. So earnest money is you, the buyer, showing good faith to the seller that you are a serious buyer and you want to buy the house. So usually within 3 business days, we ask to get the earnest money. Okay, and this money will get held in a non-interest bearing account by a third party, by an attorney, by the title company. And then that money will just come off of what your cash to close is when you go to close. So it's not like you're paying an extra $3,000 in earnest money on top of your down payment. It just offsets it. Like I said, it's just in good faith that you're a serious buyer, that you're not just saying, hey, I want to buy this house, but I have nothing to show for it. Okay? And then on the second page just talks about the closing date. Okay? Closing date on here isn't going to be set in stone. There's a lot of variables. If you get your loan clear to close, which I've got loans clear to close in like 10 to 14 days in certain ones, but standard time, guys, is 30 days. Okay? If you have nothing to sell, it's 30 days. If you want to write an offer subject to selling your house, like some other people that I know do, I just actually got one under contract last week that way. Then we can do a longer closing date because we still have to get to out. But what I'm really good at is getting those pieces of the puzzle together and then selling this offer, this 13-page, what we have 2, selling that to the other agent, saying, hey, look, I have a good qualified buyer, ready to go, and really spell it out to them, and then that will really help get your offer accepted, get it looked at quicker, and so on and so forth. And I have some other tools that I use with other agents to really help speed up that process or, prove the value of our buyer. And then when we are writing that offer, there are 3 disclosures I just want to touch on real quick, and then we're going to get to everybody else. So when we write the offer, we have the contract, and then there are 3 disclosures. One of them is a real property disclosure, okay? The real property disclosure, and you guys have a copy of that as well. The seller fills this out before he lists the property. And he says to his agent, I mean, there's some crazy questions here, like underground pits in your yard and this and that, but the main thing is, are there any defects to the property? Is there any electrical defects? Is there any, have you lived in a property for 12 months? So on and so forth. So it's just that the seller legally has, and Mario will touch on this, you have to disclose if something is wrong with your house. So again, you're not getting into the house, and then it's like, oh wow, I got, my house is about to burn down because the electrical panel was wet, stuff like that. So that's a real property disclosure. It's a seller disclosing to you, the buyer, any defects of the property. The next one is a radon test. So radon, that's what we have our expert here, Eric Yost, who's going to talk about radon. He's the licensed radon company as well as a home inspector. I'll let him talk about it. But the seller has to disclose if they know of elevated radon in their house. Okay? So if a seller says, if a seller doesn't know there's elevated radon in the house, right? But then they have a deal and the radon test gets done during the home inspection period, and there is elevated radon, right? And they're not willing to fix that, and the house would have to essentially go back on the market. They then have to disclose on this real property disclosure that there's elevated radon in the house because we do have a test for licensed radon company. So again, these 3 disclosures are to protect you, the home buyer. So The third one is lead paint. Any house built before 1978, there's a chance that it could have been painted with lead paint. 99% of the time, house has been repainted multiple times. You know, when you buy a house, you're gonna want to paint it, you know? So again, they have to disclose if the house was built before 78, if lead paint was used. If they don't have any knowledge of it, they can't say it. So again, those are just the 3 disclosures that you just be prepared to sign. And again, I'll go over all that with you when we get to that step of the process, just step by step, guys. Okay, so, and then once we get your offer accepted, you go through the loan process and then get your loan clear to close. Then we go to do the final walkthrough, okay? Final walkthrough, we're just walking through usually the night before closing or the morning of, okay? Once all their stuff is out. I've had some stories where the garage is still full of stuff, but we're gonna do the final walkthrough an hour before closing. It's like, come on, guys. It's supposed to close. So, we do the final walkthrough, make sure there's no massive holes in the walls, make sure there's no, they didn't decide to rip up the flooring to take it with as a souvenir or whatever. So again, we do the final walkthrough, we make sure you, the buyer, are 100% happy and you 100% know what you are getting when you go to get the keys, okay? Once we do after the, and again, that's what we look for. Floor to ceiling, make sure any, we did that. So, after the final walkthrough, we move to closing. You will meet your attorney there. Attorney will go over the contract, I'll go over the survey with you. I'll let my preferred attorney go over that with all you guys a little bit, but, and you get the keys. We get to move in. So, that's really a gist of really this, you know, step by step, right in the contract, the disclosures, everything else. So, with that being said, what I want to do is turn it over to Eric Yost with my guy Home Inspections. So Eric is just going to touch on some points. These are going to be quick, and we have five people or so. Just kind of talk about what they look for and what radon is and all that good stuff, and then we'll move on to homeowners insurance and so on and so forth.
How's it going, guys? So, my guy Home Inspections, we own the My Guy Home Inspections. We also own my Radar Pro.
Gosh, been in Missouri it's about a decade now. It's crazy. Time flies. I was gonna say we've done thousands of inspections, but I actually looked up this morning and did up. We've done like 5,133 inspections so far. So we've been around here for a while. So licensed in Illinois and Wisconsin. Nice thing about us is we're actually a family-owned business. So we're not some big corporation that are just numbers driven. We're literally focused on our clients. We always take care of our clients as a priority. Obviously, our agents are a huge part of our business. They refer a lot of business to us. But at the same point in time, we're always focused on our clients. So I gotta sleep at night. It's important. Right? So as far as the inspection goes, you know, we generate a full PDF report for you. So you're gonna get a full. It's like the story of the house. So I'm gonna break it down in a couple different ways for you. I'm gonna have the body of the report, which is like honey-do list type stuff, random things that I just saw that I wanted to share with you. And then I'm going to have the summary page. So the summary page, I call it the quote-unquote more important stuff. The reason I say that, there's certain things in my license that are required of me. I always use it's my famous example. I'm sure you've all heard it, the ones that know me well. A missing cover plate. It's a simple thing, right? But I, as a home inspector, have requirements that I have to check off. So I'm going to put a missing cover plate on your summary page, and then for my license, recommend the perfect contractor. So now I just recommend an electrician for a cover plate, which is kind of funny, right? So take that summary page, focus in on the meat and potatoes of your summary page. That helps you get the farthest. So that's the best thing you can possibly do. If you have questions about stuff, you always reach out to us. Google stuff. No, just kidding. Don't Google it. Don't Google anything. The Google rabbit hole. I don't want to pull you out of that, right? So if you have questions, you always process that with us. My job is to basically, bring awareness. Document these things for you. Categorize them in severity. Just to kind of help you have an idea of what you're buying. And then your agent and your attorney are going to kind of help you, coach you through those things as well as us too. Other things too, I would say there's some norms in home inspections. There's a lot of common things that I see. Loose toilets, dirty furnaces, dirty AC units, bad window seals, and then the notorious ground fault circuit interrupter, right? Your GFCI. So that's how I almost feel like if you don't have one of those on your home inspection, you didn't have a home inspection. So ground fault circuit, those are the little test reset button outlets you see in like bathrooms and kitchens and wet areas. Those are notorious for either having power not tripping or just not even being there, right? Don't get me wrong, you know, all those things they're important. They're all important things in your house, but those are very common things. If I go to your neighbor's house, your neighbor is probably going to have those things on it as well. So I would say, to me, bath fans, dryer vents, you know, improper dryer
venting.
the plastic dryer vent on your dryer vents, gas dryer, you know, right? So there's a lot of simple things that you can fix. Definitely focus on meat and potatoes. For me, I would say structural is probably the most important part, right? I always tell everybody a house is like a marriage. As long as you have a good foundation, the rest is just a little loving here and there, right? So, and that's true, right? The foundation holds up all the pretty stuff. As long as you have a good foundation, that is the most important part. And you got to understand too, when you're buying a house, there's a lot of like part-timers is what I call them, right? There's things that are in your home that are only going to be there for a certain period of time. Your roof's going to go after a while. Furnace, AC, window seals, GFCIs, right? So your foundation is truly the most important part of your house. I'm still going to go over everything with you. I'm still going to talk about age, conditions, anything to definitely focus in on. I'm going to document those things, categorize them for you, and kind of head you in the right direction. Obviously, if I could, you know, predict the future or see through walls, I probably wouldn't be standing here right now. But I'm going to get you pretty dialed in, all right? I would say, as far as radon goes, you know, the radon division, radon side, like you were saying earlier too, you know, if you do have elevated level of radon, if they don't help fix it, they have to disclose it, right? So during a real estate transaction, in my opinion, it's like the best time to do a radon test because there's potential that you could request that the sellers pay for mitigation. They don't have to. There's no law that says they have to. But if they don't, they have to disclose. And if they do agree, they also have to pay for the post-mit test. So now you're getting a radon mitigation system installed, and you're getting the post-mitigation test because we have the initial test, and then we have the test after to make sure that that system's actually functioning. Does everybody know what radon is? You guys familiar with that? Yeah. That's right. So
Go give a quick.
it's a soil gas. So soil gases are all around us. They're everywhere we go. There's radon in here right now. We're breathing it in. All right. It's focused. We're really trying to focus on concentration of radon, like how much radon has entered your home. It has a 3-day life cycle. 3-day plus life cycle. So we really want to focus in on how much the concentration is. So the state of Illinois goes by EPA standards, which is a 4.0. So anything 4.0 or above is when they recommend, it's like your action level. They recommend a mitigation system against you. I would say the most important thing about radon is it's not a reason not to buy an house. It's more of like you're kind of checking the box. Do I need a system or do I not need a system? Right? The radon mitigation systems are excellent. They actually act as dehumidifiers as well. I mean, think about it, they're pulling moisture out from below the slab, and they're also helping you have. Traditionally, you actually end up having better levels of radon in your house than most people do. So, definitely not a bad thing to do during the real estate transaction. So, do you guys have any more questions at any point in time? I'm gonna be hanging out here. Let me know. Okay.
All right, moving on, guys. Isn't this fun? So, next we have Mario Cacharo. Mario is my preferred attorney. We've done 100 plus transactions together in the last few years. Mario is well versed in real estate law as well as other laws, so I'm just going to let him take it away and we'll go from there, guys.
Okay, hi, I'm Mario Cacharo. In the last 4 years, I've probably done well over $100 million in real estate transactions. not just limited to Illinois. I've done deals in Wisconsin, Indiana, Florida, Italy, Mexico, you name it. I follow my client. So if my client is selling on the chain of lakes and they want to build a house in Florida, I'm going with them for the whole ride. So A to Z. I specialize in investors. I like investors, so people that want to do a 1031 exchange or something like that to avoid the tax consequences of a flip. Say you buy your house, you bought it for 200, you sell it for 300, you don't want to pay the taxes and get 100. I can help you put that in your next home. But for our intents and purposes today, we're going to talk about the real estate contract, the all type work. Paragraph 10. So in paragraph 10, it's the attorney inspection period. You have 5 business days to complete an inspection. The first thing I always recommend when Brad refers me to a client, or I refer clients to Brad, I like working with Brad. Brad is very diligent and he's versatile. This guy has been selling mortgages for
3 years.
but before that.
Since 2003.
He was doing mortgages and he's been in the real estate business for 20 plus years. Combined. So it helps because he makes Logan's job usually easier because he knows what to look for. I like working with these guys. I've had the privilege to work with them many times and it's been beneficial for all of us. But so anyways, 5 business days. So at that point, the home inspector will go in there. He'll create a detailed report, everything that's wrong with the property, from potentially a crack in the foundation, a radon that is above 4.0, anything that can happen that he already covered. So at that point, I would prepare an attorney modification letter. So I would send the attorney modification letter to the sellers and say, these are the items that we need to get repaired prior to closing. And that usually cuts 2 ways. Either 1, the seller will say, sure, we'll repair these items, or 2, and sometimes this is beneficial for the buyer, they'll say, hey, we'll give you a closing cost credit in addition to the credit you already have of $5,000. We don't want this headache. We're not looking to fix all these items. That just made your payment go down, or potentially your amount to close go down. So that is the main thing that I will do for you. But what I do overall is I am your voice of reason, because buying a home is a very intimidating process, okay? People are nervous about it. There's a lot going on. I answer the phone with me the entire set. I'm going to be with you the day of closing when we sign the documents. I answer every question. I tell my clients all the time, the only dumb question is the one that you ask. I want you to ask questions. I want to tell you my knowledge of the business. I've been in real estate pretty much my entire life. My parents, when I was born, already owned apartment buildings, and I was doing invoices for them at the age of 12 and setting up their billing process. So it literally goes that far back. I manage somewhere between 30 and 50 properties currently. So I flipped houses, I bought houses to rent. I'm kind of involved all the time. So there's a lot of things that I know about the process, and that is mainly what I'm here to do for you, is answer your questions. So day of closing, I'll go back to that really quick. Our time is limited. Say that day of closing, me and Brad have seen it 1,000 times. Seller doesn't move their stuff out. Now what? So I'm that guy that on speed dial, and so does Brad. We have a junk guy that'll come and grab it, but I'm making the sellers pay for it. My client's not going to pay for that. We're ready, willing, and able. We're at the closing table. We have a check for you guys. You guys haven't moved your stuff out. All these little things that happen, you just have to be prepared for it. You have to have people that have experience. And that's why I love working with these guys, because they're very experienced, and I look forward to working with all of you.
Thanks, Mark. Thank you. All right, cruising on through, guys. Danny from, Danny Jenkins from Smart Title. She's going to come and just touch on it real quick, just a little bit about what a title is in like a title company. You can go from there.
Yeah, awesome. Well, like he said, I'm Danny Jenkins, and I am with Smart Title. The biggest thing, and I promise I will be quick, is to go over what is title insurance, because even some of my friends and family, they think I'm a realtor, or they think I'm in mortgage. A lot of people don't know what title insurance is. So what title insurance is unlike your auto insurance or your health insurance that protects you against anything that's happened, that's going to happen in the future. Title insurance protects you from anything that's happened previously with your property. So we look for any judgments, liens, so any prior mortgages that were on the property, or like a mechanic's contractor wasn't paid, or taxes haven't been paid. So we check for all of that and make sure that when you go to buy your home, it is free and clear of any risk. And if something was missed, it is insurable through the title insurance. So that's why it's important to have a title company that has been around for a long time, experienced. And yeah, that's pretty much it. So if you guys have any questions, or if you do buy a home or sell a home and you get to the funding table, or you have title questions, I'm always here for you, even if it's stuck within Smart Title. Look, that's pretty much it. And
Awesome.
I just want to say thank you for having me. It's huge to have a great realtor that's experienced and has an amazing talent professional.
Awesome. Thanks, Danny. Awesome. Moving on, we got, let me see, we have three more. So now we have James Underwood. He's with Goosehead Insurance. I just wanted to touch because I'm so excited about it. I just shopped my insurance last week. And
Pretty good job.
did a great job. So I'm actually saving the first year, my wife and I, on our bundle policy, we're saving $1,000 a year.
And we increased the coverage.
And we got an extra $1 million in umbrella coverage. So it was like, okay, that's a no-brainer. Save $1,000 a year. So the rates are competitive, great customer service. So I'll let James talk a little bit about homeowners insurance.
Everyone's most excited topic, insurance, right? So anyone saw their insurance price go down in the last few months, right? Your car insurance just keeps getting cheaper. No? Yeah, no, okay, yeah, exactly. So insurance, you need it. You're buying your house, and if something terrible happens to it, I'm sure you'd still like a house. So that's what insurance is there for. It's for sudden and accidental things. So if you have a fire, a tree falls on the house, pipe breaks, something terrible happens and damages your home, insurance is there to put it back in the way it was. Now what it is not, it's not home maintenance. So if your dishwasher breaks, if your water heater stops working, your furnace goes out, that's the home warranty that we kind of mentioned. That's going to cover your appliances. This is when you're out hundreds of thousands of dollars. Insurance is there to make you whole again. So you need insurance when you have a mortgage on a property, whether it's a fix and flip, a first-time home buyer, you're buying a secondary house in Wisconsin, you're going to need insurance on it. Now, when you pay it off, I do have people that say, hey, I paid off the loan, can I cancel the insurance? I'm like, why would you do that? You have a $100,000 plus property now, so please don't cancel your insurance. But the main things for insurance is covering your property, and then what is and isn't coverage. Because I'm sure, Logan, you can attest to this. How many times has someone gotten the pre-approval to get the offer in, they're ready to go, and then they just email you a quote from their current person. They call their current car insurance, they're on the phone for 30 seconds, they say, hey, I'm buying this property, 123 Avenue on this date. They email you a quote, and then you send it over to Logan, and you're good to go. Except you don't know what's covered, what's not covered, you don't know what your deductible is, so then in 2.5 years, when a tree falls on your house, and I tell you it's $5,000 for your wind hail deductible, you're like, well, it was only $33,000 damage, but now you don't have a claim, or you don't have coverage. You're gonna have a claim filed, your insurance is going up, it's a whole nightmare. The same difference that you're experiencing with people that are informed, you can go online and I guarantee you can find a very, very cheap quote. You see all the commercials, 15 minutes or less. We've been here for over an hour talking about your home purchase. It might make sense to take a half hour to an hour to go over your home insurance. You're spending hundreds of thousands of dollars for this property. We should take a little bit of time to make sure something terrible happens. We can get you in a house again, or at least we can get it rebuilt. Home insurance is it's a lot. I can talk about it for an hour up here. I actually teach classes on this, and it's not something I can go over in 5 minutes, but the basic gist of it is talk to your current car insurance person when you put in the offers and you get that accepted, is you see all the commercials online at every company, package and save, bundle and save. Whether that's with me or your current car insurance, get that quote worked up. There is no negatives to getting multiple quotes. The earlier you do it, the better. What I always try to tell every realtor I work with, the minute you get that offer accepted, you're in that 5-day inspection period. Don't you want to see what the insurance is going to cost? Because if the insurance is $4,000 and he estimated 12, we might not be getting that house. Now, I'd like to do that during that 5-day period because I can maybe see, is the roof 30 years old? There were prior claims that maybe that prior homeowner didn't disclose that I could help you find out about. Just those little things, and then let's talk about the fun stuff. 30 days and out, like if you quote in advance, that's a huge discount with almost every carrier. You don't need to buy it, you don't need to finalize it. That's just calling your car insurance guy and say, hey, I might buy a house next month. Can you send me a quote? That might save you 10%. I like saving a lot of money. That's a super simple tip. And then get quotes. So when you get that offer and you call your car insurance person, shop that around. You can call 30 companies, or you can call me and I'll shop you through 30 plus companies. That's the main difference with a broker. So I'm going to take the time to share a 5-10 minute phone call with you, get all the details about you, your property you're buying, why you like it, and then I shop you through the market. Then we share a 1 hour Zoom call to go through your coverage, your auto, your home, your umbrella. We talk about everything. If you don't want to go with any of my suggestions, that's fine. At least now you know what is and isn't covered. We're not going to do this conversation every year because you've already bought the house. We're going to go through it all right now. You're going to tell me what you do and don't care about, and that way if something happens and you're calling me going, James, I got 2 inches of water in the basement, what do I do? I can refresh your memory on if you have coverage for that, what you would pay out of pocket, and next steps. I hope that I sell you a piece of paper that you never use, but I want you to have your house covered, God forbid, if you need that. I could keep talking for forever, but does anyone have any basic questions right off the bat? Nice and easy.
Awesome. Thanks, James. So we're really on to the next one.
Yeah, let's go.
Guys, all right. So next one is I just want to touch on, and we said the term a couple times about a home warranty. Okay. Home warranty. It's not your, like James said, it's not your homeowner's insurance policy. This is a policy that protects you in the first year, 2 years, 3 years, whatever policy you have. If something with the mechanics go down in the house, if your appliances go out, if your washer and dryer go out, in every policy, every warranty is different. What I like to do is just say for the extra $50, cover it all. For the year, if it's an extra $4 a month, let's get you the platinum policy. So, and again, not everybody wants a home warranty or needs a home warranty. The biggest thing is it's there for you guys. If we get that home inspection done, right? Here's an example. You get the home inspection done and the furnace is 30 years old, right? We can't ask for something that isn't broken. As an agent, I can't say, hey, look at my buyer, what's a $6,000 furnace? Well, we can't. It's not broke. We can't fix it. But what we can do is you can have a home warranty attached to your house, and then that will cover, like I said, those major, the furnace, the AC, and all that good stuff. Lori Amato, who is my rep, I talk to her 3-4 days a week in regards to deals. She's fantastic to work for. She has COVID, so she couldn't make it, but she did provide me with some information to share with you guys. So a couple big points is Choice Home Warranty right now, they offer a 13-month policy for the price of 12 months. So you get that extra month, which it adds up. So right to that 13 month, you guys are covered. Okay. Convenient online claim tracking. If something happens with your fridge and it's covered under a warranty, you go online, you put out a ticket. It's kind of like they call it Uber-like dispatch and claim tracking. Okay. So you'll know when somebody's going to come out to your house to take a look at that furnace to make sure that, and if it's something that's repairable, that company will repair it. And the only thing you guys are paying out of pocket is a $75 service charge. Okay. One other thing I wanted to touch base on that is huge. A lot of my buyers use it because it's a $75 service charge. Is if you have a home warranty with Choice Home Warranty, they will rekey up to 4 doors in your house. It's a locksmith. It's not somebody else. So you can actually, the day of closing, you can actually set it up right before closing. So if you're closing on the 30th, you go on the Choice Home Warranty website and you can actually have your house scheduled to get rekeyed because you want to have your own keys to your house. And that's a service not a lot of people offer, and it's $75. If you want to get a locksmith out to come in, or if you don't want to spend an hour and a half a day, 2 hours a day, and you know it's going to get done right by a professional, that's just another service that these home warranties offer. Okay. There's a monthly payment option. So if you don't want to pay, I'm raffling off 2 of their top tier ultimate Choice Home Warranties today in about 15 minutes. So I decided I was gonna do one. I'm like, you know what, let's see. So what I'm gonna do with that is if you guys, if you guys win that, you guys can come to me. When you come to buy the house, we'll get you to the house and I'll cover at closing $660 for you guys. So again, it just gives you guys peace of mind, So they're all vetted, they're all approved vendors that the Choice Home Warranty is going to use. Okay, so it's not going to be some, they're all good quality work. I can personally speak for Choice Home Warranty at my old house a couple of years ago, right before closing. My furnace went out.
Right.
I had them come out, $75. They were able to repair it. And then I also have used them for a hot water heater, which it was $75 for them to come out, and they replaced the water heater. It should have been, I think they invoiced it for like $1,500. So again, it's a great umbrella type, just to give you peace of mind when you are buying a house. One other big thing, Lori, she called me this morning to tell me, this is one thing that not many home warranty companies offer, is 100% refrigerant covered with no limit. Certain home warranty companies. So anything with refrigeration that is done, they will cover that, and there's no limit. So again, that could cost you, $100 to $300 per pound of refrigerant that's going to go into certain appliances, your AC unit, stuff like that. So again, if it's unlimited, you pay the $75, boom, it's covered. I mean, it's that easy, and again, I can speak for them because I've used them, and I've gotten paid out on fuel policies. Okay, and then attached to, and you guys have copies of all this in your envelope. Attached to it talks about the different policies, what they cover. One other thing I want to touch on: swimming pools, stuff like that. I thought you can add that as an addition to your home warranty. If you wanted certain pool components or certain other components of your house that don't fall in there, they do have like an a la carte type pick and choose what you can add and stuff like that. So, again, it just gives you, the buyer, especially if you're a first-time home buyer, peace of mind. I can't stress that enough, guys. Okay. So, and then Lori does have some literature here that she provided us. So please take one when you leave. And then that's really what I have on the home warranties. Anybody have any questions in regards to home warranty? No? Okay. And again, any questions that you guys have jotted down, or you want to come speak to us separately, after this, or next week or whatever, we are here to help. It's either. So, last but not least, my guy Eric. So Eric is with Heat and Water Conditioning, and I had them come and do reverse osmosis water system in my house. They put a water softener in my house. So Eric's just going to touch on water quality, and we'll hopefully make your water quality the best.
Thank you, Brad.
Yep.
Eric, Heat Water Conditioning. We primarily deal with McHenry County water. McHenry County water is almost 100% well. So we're constantly dealing with a lot of hardness, which is calcium in the water, and iron. Okay. These can easily be treated from a home basis, and it varies from home to home. So whether I'm at your house in the afternoon or somebody else's house in the afternoon or in the morning, those things can vary drastically. So it's very important for one of us salesmen or employees at Heat and Water to come out to your house. We'll test your water, assess the piping in the house, and see not only what would be the best equipment for your household, but where to put it. For most homes, we're trying to put that near a water meter. Most people's water meter is an open area. Some people it's not. So we have to find different obstacles to overcome to be able to provide you guys with good water here in your house, townhome, wherever it may be, okay? Even place of business. We are a 3-generation company. We're just a small family company. We're right here in Johnsburg, Illinois. We've been around at our spot since 1960. So this is something that we've been doing for quite a long time, and we have some pretty good experience in it. Water is ever changing. So there's not always a perfect answer, but we're gonna damn near try to fix everything for you, okay? With that said, when you're going to buy a home, sometimes a realtor will let you know that there is a software in the home, or whether it's rented or it's owned. That can be ever varying from home to home. There's a lot of times where that can put a monkey wrench in the person that's buying the home. Well, you guys said this software was included in the home, and now it's not. So those can be some variables with that. So
And that will be checked if the water softener is owned and it stays with the property when you purchase it. It'll be on that middle section of page 1. So, and that's one thing I am very adamant about. When I'm listing a property, I say, do you own this or do you rent it? I mean, some people say, I don't know. I've had some people say, no, I bought this thing last week, or no, human services it. So again, it's good to know what's staying with the house when it comes to your water quality, if it's in the reverse osmosis system or if it is a water softener.
yeah, and so with our equipment, we have 3 options essentially. You can either purchase our equipment, you can rent it, or rent it with the option to buy. And I'll go over all those things with you when I'm in your home. But essentially, those are the ways that we're able to help you get better water into your house and for your families. Or we look forward to the opportunity of doing that in the future.
Yep, and then, go ahead.
So does Heman also drill wells, or
Yeah, so primarily Heman started as a well company. So the family was dealing with drilling the wells. Water treatment became prominent in around the 50s and 60s. So at that time, there were 2 brothers, and one of the brothers said, I'm going to keep drilling wells, and the other brother said, I'm going to start treating the water. And so that's kind of where our division split, per se. We're still the same family, but 2 separate companies. We work very well together. Usually when a well is dug, we are in contact with each other, trying to figure out with the homeowner what's going to be the best way to treat their water. So, but they are another company in the area, and especially if you have a private well, they're right here in Ringwood. And if whether it's their names on the well or not, they're happy to help you out as well.
I can attest about those guys, great group.
Yeah.
Yeah, they're a staple in the
I
area.
was just with John this morning, he does the well.
Okay.
And very, very good.
Good people, knowledgeable.
And so today, what I'm going to be providing you is basically a pamphlet on giving you guys some money off on a water treatment system, whether that's going to be a water softener or reverse osmosis for your home. So there is a pamphlet on almost every table here. It has my card on it. I'm happy to give you my personal number. That is my personal number, so you can reach me directly. But with this pamphlet, the sheet that I'm going to give you, that's going to allow you to contact me have come out to your home, test your water, give you a water audit, and then give you some sort of idea of what would be best to treat your home.
Cool. And then one thing that Heman was gracious enough to do is in your guys' folders, there is the pamphlet I have in there, as well as he said about the different options for discounts and whatnot, and then also they're going to throw in a free bag of salt if you contact them. So just make sure you just touch base with Eric before you leave on your way out, so he can just sign it. And then if you guys you have a water softener in the house that you're buying, you get a free bag of salt. So, and they also deliver, they have delivery options for salt and all that good stuff. But Eric will go over all that with you. My main goal of having him in here is to really just get an idea of what your options are. What your options are. If, so you gotta remember, water's going into your body. You want the best product going into your body.
that's right.
So, awesome, guys.
I'm free for any questions afterwards, so I'll
Cool.
leave it back to Brett.
So really, guys, that's what we have. And if I even start a couple minutes late, it is 2:00 at the head. So what I want to do is just, does anybody have any questions about any, and if you don't want to ask them now, feel free to reach out. Does anybody have any questions? No? Okay. Yes.
It's not for Sunside, but
No.
so if we were going to sell our home and the buy a home, kind of goes for you. Would I use the same lawyer, the same realtor to do both, or?
100%. I have one closing on the 31st.
Okay.
And one thing that Mario and I are very good at,
Well, then.
one thing him and I are really good at is it's like, if you, it could be stressful because if you're selling and you're using those proceeds to purchase
Same day.
a piggyback, back-to-back closing, it could be stressful, but there are options out there. We can do,
Many.
we can rent it back for a day. But yes, it is a one-stop shop. And my job is to make it as less stressful as possible,
They won't be
because
stressful.
I've had buyers come up and say, and sellers, like I said, I have one closing, 2 of them closing next week. And they're like, we're gonna be homeless for 3 hours. Or, you know, I'm closing at 9 and then I'm closing at 12. Well, my job is to give you guys options and give you just peace of mind that we're gonna get you there, and it's gonna be with the least amount of stress as possible for you. Yes, 100%. It is actually easier, much easier, because he knows how much, if you're selling your house, how much your net proceeds are gonna be. So we know that figure. It's just so much easier just to keep it in the family, keep it in-house.
And if one's delayed, it'll traditionally delay the
Trigger the
second.
other
It's a
one to be
domino
delayed,
effect, right?
so
So
it's-
if your
yeah, so-
your buyer that's buying your house needs an extra 7 days, then you're not going to be able to close for 7 more days too. And
Right.
It's good to have the same person working on that.
And again, that's why
Fluid.
it's about surrounding yourself with the best of the best in the industry to really be able to get you there.
Sam, I have questions also.
Yep.
Is it a common practice with country when you chose the car, was that knowledge to sell off the mortgage right after you initiated the mortgage? Pretty common.
So there's no way of us knowing at that time, but we do service some of our own loans, and then we have servicing partners that when you get your mortgage statement, it still says cross country, and that I can still see. So I always tell my clients, like, even if you're serviced by, loan care or whatever it may be, I can still be your point of contact.
Okay.
So that if you do have some kind of issue, like, I'm the one that's helping with it, not some person that you're having a hard time getting a hold of.
Right.
If that makes sense.
Very common.
2 days later.
Yeah, so what's gonna happen is when you close, you're gonna get a first payment letter in your closing paperwork just in case, but there is a good chance that it will get sold off, but just rest assured. Yeah, I know it can be kind of aggravating, like, we just ran into it. Who do I write my check out to? Do I write it out to
But they
Chase?
made it a little different for us because of that. So even if we do transfer it to somebody, they now say it's like a sister company of ours.
Okay.
So it'll still say you're being transferred from cross country to cross country doing business as,
Subsidiaries.
so that we still have access, to see all of your stuff.
Gotcha. That was not hard.
Yeah.
That's not common. It's not, that's pretty
Yeah,
rare.
exactly.
Yeah.
Any other questions, guys? Okay, so my daughter has been itching to want to do the raffles. Just to conclude everything, but again, I just wanted to give a heartfelt thank you, guys. Thank you for coming out. Thank you for, hearing us talk. I'm hoping that if you got something out of this event, including food. And, I would love to earn your business. Okay, referrals, I would love to earn your business. I know all my partners here that presented would also love to. So again, do not hesitate to reach out to each of us individually or to me, and I can, if you don't, if you have any questions, I will get you to the person if I can answer it, then at least, be able to answer it for you. So, first, hold on.
Okay, we're just like funny.
So first, we're gonna do a $100 Amazon gift card, guys. And again, thank you to our sponsors that have paid for these to help facilitate the event. So, okay, so Stella, go like this. No peeking. Ben Nolan. Oh. Let's go. Good start to the day. Next one, we got another $100 gift card, guys. Let me shuffle them up a little bit. Okay. Next one. I can read it. Lisa Inglis. Oh. Okay, moving on, guys. We got a couple more, and then enjoy your rest of your Saturday. Next one is for a home warranty.
No, Home Depot.
Oh, the Home Depot, I'm sorry. Clara. $100 Home Depot gift card.
Thank you.
Okay, now we have a couple home warranties, guys, so. Okay, and again, with these home warranties, when you guys go to closing, I'm gonna cover it out of my pocket, out of my commission. to make sure you guys are happy with the Megan Lee, good job. Okay. Last one warranty guys. Whoa.
Hey, she banned every pass.
Jeff Saber. All right, guys. So really, that concludes everything. I'm gonna be around, just hanging out, taking stuff down. So again, I do want to give a heartfelt thank you for everybody that has come, that has taken time out of their Saturday to hear us talk. Hopefully, there was some knowledge, shed for you guys, and I really hope to hear from everybody in the future. So, that being said, have a great Saturday, guys. Don't forget to take this stuff.